Now, just give me 10 minutes and that's all it might take to gain a clear understanding of just one very critical trading dynamic that might just help you to navigate the markets with a lot more confidence and obviously less regret. Now start the timer. There is a certain discipline in trading, a quiet power in knowing when not to act. This past week with the NASDAQ really underlined that for me. I had a specific setup in mind, a particular set of confluence factors that I wanted to see in the market. I was patiently observing, waiting for everything to align perfectly before I took a trade. And you know what? Yes, the patience did pay off. Now, this title is not about just blindly jumping into any trade that you see. It's about developing a skill that will help you know when your patience is helping you to protect your capital and when it's actually causing you to miss out on solid opportunities. And you guessed that right. My experience on the NASDAQ this week was a perfect example of both. Now, by having a clear plan and waiting for a specific criteria to be met, right, I stepped aside a lot of potential choppy price action markets and avoided getting caught in setups that did not have high probability success for my strategy. So it's that feeling of being disciplined, of sticking to your set of rules, right? And watching that protect you and protect your account. That by itself is just a confidence builder. Now, what does that show you? The importance of having a well-defined trading plan and actually sticking to it. However, just as usual, the week wasn't entirely without its lessons. We always get lessons from the market. While my patience was saving me from potential pitfalls, I also realized that being too rigid and waiting for the absolutely perfect scenario that might never actually materialize was also very limiting. Now, I only had 2 trades for this particular week. Now, towards the end of the week, the market presented a setup that wasn't exactly what I had initially envisioned on the NASDAQ, but it still aligned with my core strategy and offered a strong probability of success. And because I had been so focused on waiting for that ideal entry that I wanted, it took me a longer time to realize that yes, with slight differences, this is still a valid opportunity. And thankfully I caught it right on time and we ended up closing the week off in pretty decent profit. And now what am I saying? You need to know what is waiting for a high probability setup versus letting perfect be the enemy of good, and you eventually miss out on very profitable trades because you are simply not flexible. So how do you actually want to have this balance in your trading? How do you become better at discerning when to hold back and protect your capital and when to confidently act to seize these profitable opportunities in the market? And that is exactly what we're going to explain today in this particular weekly analysis. Now, if you're new, find the channel for the first time, welcome. We trade the NASDAQ over here. If you're returning, welcome back. Here, know what's up. Don't forget to hit that like button, turn your post notifications, and subscribe to the channel. And without further ado, let us go on to the charts. Now, the scenarios are going to be very different depending on whatever chart you're going to open, but you should be able to read a candlestick chart as soon as you open it, right? Now, on the NASDAQ, we can clearly see that the point where NASDAQ currently is not any valid point. That already marks out something for us. These are the all-time highs. NASDAQ is almost close to them. There is a high chance that it's actually going to go to the all-time highs and potentially break out of the all-time highs. Now, this is going to be our first point of interest. Second point of interest we're going to have where it broke out of a previous resistance level, turned it into a support area. This is our second point of interest. Why? This can never be a point of interest because we do not have anything indicating that it's a point of interest. Then you already know that you're either staying out of this market, waiting patiently for a setup to come to one of these areas, either this one or this one. Now, what you want to do, this is a daily time frame. It's totally difficult to trade like this if you're not a swing trader. We drop over 2-hour, 4-hour time frame. On the 4-hour time frame, we can clearly see that these are the choppy markets that I was talking about. We don't really see anything on that. We're going to have to drop over to the 1-hour time frame. then on the 1 hour time frame, we're having something that actually makes sense. Just the same thing, we're trying to find an immediate trade, right? We do have our new highs for this particular time frame. These are the highs on this particular 1 hour time frame. We would expect NASDAQ to break out of these highs to continue to our daily highs. So this becomes our resistance area, this becomes our support area. Now that's very simple as it sounds. We broke out of another previous resistance area, have turned it into a support. We only want the market to break out of two support levels to eventually show us that it's going down to probably close this gap. So what we're looking for on the NASDAQ is, want the NASDAQ to either come and buy from this area or to come back to this bank zone. You can clearly see this level here. We're going to have two attempts. But me though, personally, I would want NASDAQ to break out of this level first before I can actually consider a buy. I wouldn't want to buy at this area because it's too obvious for everyone. Everyone will be looking right at this level. And then obviously if it then comes here, that will be a more ideal setup for me. So I would skip buying at this area and then buy it probably from this bank zone, or just buy it as soon as it breaks out. Now waiting for this to happen will give us better chances of winning on this particular NASDAQ trade. Let's go over to US30. Now US30, that's one and the exact same thing that we're looking, but the only difference is US30 has already broken out of a significant area that you're seeing here and is currently trying to do a little retest. A retest can happen right at the breakout, or it can find another bank zone to use as a retesting point. So for me to look for potential buying areas on US30 will be in this area right over here, not obviously forgetting the gap that both of these markets have, and also not being biased to the fact that they should close the gaps, because most times they just would not. Right now US30, this is the exact setup that I would be looking at on the 1 hour time frame. Let me see what's happening on the daily time frame. On the daily time frame, we can clearly see that it hasn't really touched this level, which could act as a resistance area. But then again, we shouldn't forget the fact that it has indeed broken out of this certain trend line. So what we know is the bias, which is bullish, is indeed correct. We just need to find better entries on the lower time frames, right? Just the same way I marked up on NASDAQ, we're going to have this one and probably at the gap here. I wouldn't really be biased towards the gap, but as for me, I'll be playing around on the lower time frames for US30 to see exactly what we're looking for, just for the breakout of this area right over here. Coming into this zone, I will look for buying opportunities and try to ride out US30 to this level right over there. That's very, very simple. Let's go over to gold. Gold absolutely gave me a losing trade for the week. That is the trade that I actually lost on gold. I lost a trade on gold last week. I did enter trying to use this bank zone right over here. It got tapped out on, and as you can see, the market wanted to come to this trend line, and then right now it has perfectly sat on the trend line and is kind of like pushing up to the top, but we still do have a lot more room for it to move. On gold, we do not really see anything that is actually causing this market to stay or bounce off this area right here. I wouldn't really want to look for buying positions anymore in this area. I wanted it to buy from this bank zone. So what I would probably do on gold is to wait if it does come to this area right over here, or if we continue going up to the top and break out of this area. For gold, I would totally trade it on the daily time frame or on the 4 hour time frame. On the 4 hour time frame, let me see what I am looking at. We do have a trend line that we can draw like this on gold, and as soon as it breaks out of it, right, it would have confirmed this bullish momentum that it gave here. As soon as it breaks out of this trend line, obviously it's going to come to this area and face a little bit of rejection. That is when I would expect it to come and retest the trend line. At that, I would now look for buying opportunities and ride it up to the top. Now, it doesn't sound complicated. The only thing you need to do here is to wait, assess the situation, and don't be too inflexible. Let the market tell you what it wants to do and just simply act on that. Now, if you found this breakdown helpful and you did enjoy the video, don't forget to hit that like button, turn your post notifications, and subscribe to the channel. That is me, Tino, and I'll see you in the next lit video. Love you guys.